G'day everyone! Welcome back to Nadlan Forum Podcast Daily. Ruby here, and as always, I'm joined by Leah. Mate, we're in for a big one today, blanket mortgages. These things sound like sleepwear for your house, but they're actually one of the juiciest tools out there for investors juggling more than a couple of properties.
Yeah, and it's not just for the big boys with skyscrapers. We're talking about everyday investors who want to make their lives simpler. No more running after 5 different payment schedules and a stack of loan documents for every single property. With a blanket mortgage, you basically wrap multiple properties into one loan agreement. Instead of, 12 envelopes from different banks, you get one. Real easy to keep track of.
Exactly. And it's different from your regular single property loan. Like, traditional mortgages are one property, one loan, right? But this is one loan that covers a handful, or sometimes a whole basket of properties. You pay one lender, keep all your properties as collateral, and have a much tidier spreadsheet at the end of the day.
And there's the magic bit, the release clause. I love this thing. It basically lets you sell one of the properties out from under the loan without messing up the whole structure. So if you need to flip a house or offload something, you just pay off that property share of the debt and keep the rest of your portfolio rolling. Much more flexible for people doing buy and hold or even flipping properties on the side.
Oh, let me tell you, a few years ago in Melbourne, I was helping a friend with 3 different short-term loans on 3 ratty apartments. I swear, I nearly went bald trying to coordinate all the closings and payments. If we'd had a blanket mortgage, that seriously would have been one set of loan docs, one payment, far fewer headaches. So this isn't just some paperwork hack. It's like peace of mind if you're handling lots of properties at once.
Yeah, and it's increasingly relevant now, especially as more investors try to scale up. But it's not as simple to get as your first mortgage. You gotta be ready for more paperwork and higher standards because the lender's taking a bigger risk.
So before everyone races to their broker, let's break down the good bits and the not so good bits. First, the perks. It's faster, fewer applications, you just deal with one payment each month. And massive bonus, you can sell off properties one by one without untangling your entire loan. If you're flipping or constantly adjusting your portfolio, that's massive.
For sure. And you save on fees, closing costs, and underwriting fees for each property add up. With a blanket, usually it's just one set. Plus, in some cases, you might get better loan terms because you're bringing a bigger deal to the table. The lender sees that, maybe even gives you a better rate than if you chop the deal up into little pieces.
But it's not all sunshine. The requirements are kind of next level. You need big cash reserves, strong credit, like really strong, sometimes a bigger down payment, even up to half. Balloon payments are common too. So at the end of the term, you might owe a massive chunk all at once. Oh, and if anything goes wrong, all your properties are up as collateral, so the whole portfolio could be at risk if you default.
Not to mention, not every lender offers them, so it's less available, and that means less room to shop around for a great deal. I've seen this play out. There was this developer in New York, had 6 small apartment buildings, went for a blanket mortgage. It worked brilliantly. He sold off 2 properties midway, genuinely streamlined his business, and his cash flow actually improved since he wasn't paying several lenders. But
I can feel a but coming on.
yeah, there's always a flip side. A different developer took out a big blanket mortgage, but then one building had trouble with occupancy. And suddenly the whole thing was shaky. When your collateral is cross-tied, if one property tanks or you run into cash flow issues, the lender looks at that and can move on the whole package. That's a lot of risk stacked up in one basket.
So basically, if you're experienced, like you've juggled multiple rentals or flips, and you've got the reserves, it can be a powerful tool. But if you're just dipping your toe into real estate or only own 1 or 2 properties, this probably isn't the way to start.
Let's talk about how you actually get one. because this process is kind of its own beast. First, forget about most big banks. You'll want to look for lenders who specialize in investment or commercial real estate. Portfolio lenders, private outfits, or brokers with a track record, that's where to start. Sometimes networking with other investors is the best way to get intros to the right lender. Not always obvious from a Google search.
Yeah, and before you show up at their door, get your ducks in a row. Detailed info on every property, condition, value, rental income, plus all your financial statements, business plan, and proof of your experience managing properties. Lenders want to see that you actually know how to handle a portfolio, not just one or two rentals you inherited from your nan.
And ask the right questions. Can you add properties down the line, or is it locked in? What's the balloon payment structure? Is the release clause flexible so you can actually sell a property without penalties? Every lender is different, so compare the terms carefully. Don't just look at the interest rate. Down payment, release terms, prepayment penalties, the works.
This reminds me, there was an Israeli investor I met last year, managed to pull off a blanket mortgage on a bunch of US rentals. She compared a few lenders, got a killer release clause, and used that flexibility to swap out one underperforming property for something better, without refinancing the whole loan. Proper case of using the product rather than letting the bank dictate the strategy, you know?
Exactly. You gotta approach blanket mortgages like any creative finance tool, with clear eyes and a game plan. Make sure your cash flow is solid. Understand your risks and don't be afraid to negotiate. Sometimes you can add a property, sometimes you can't. But unless you ask, you don't know.
All right, that's a wrap for today. Blanket mortgages aren't magic, but for the right investor, they're a clever shortcut to scaling up without drowning in paperwork. We'll keep digging into more strategies like this in future episodes. So if this got your gears turning, stick with us. Leah, always a pleasure. Catch you next time.
Thanks, Ruby. Always fun. And thanks to everyone for listening. If you've got questions, you know where to find us. Until next time, bye now.